TGIF, Hugo, Brock, Alexander, how are you guys? Well, Marco. So let's start off with the dollar. Hey, TJ, doing okay? S&Ps were pretty tricky yesterday. Yesterday I talked about the dollar at previous highs here. We're getting a nice pop. Still need to penetrate it, but I still think that this is not the high. I know a lot of people think it is. I still think there's quite a bit to go. No, they ran out of Moderna. They canceled it. So I have to wait till next week. Government. Okay, so here's the S&Ps. So we had a throwover on this wedge, and I got taken out. So we've had a couple of things. Maybe this wedge isn't that valid, but we had the throwover, and then we had the breakdown, and now we're back inside of this. So yeah, it'll be, thank you, Galaxy. I was a little aggravated because I'm planning a move and this delays it. Something else I talked about that's manifesting today was, remember yesterday, I said that I didn't think that yields had peaked yet, that we would have a 3. Oh, sorry about that. And we're getting that now. To kind of see it better on a 4-hour. See, so here we are, challenging the highs, which, gave the yen a pop, right? So with yields going up there, yen popped again, not quite at new highs. Think it will make new highs. Maybe this time it will not confirm. Hello, Monica. Just like yields may not confirm. The power of something that I use, and I've shared it here, the weekly off number. I just want to show you guys this. Doesn't mean that gold can't dig in its heels and rally from here. But this week's off number, and when you count back 2 candles here, was 1734.75. Close enough for government work. We got to 1740. So, rallied up to the off number and came off. So metal's looking vulnerable with the dollar. So it's going to depend on whether the dollar can break out above the 92 level again. I think it will. So we'll see. One of the weakest performers when the dollar's good is Canada. But so far it's trying to hold the 78.6 level back here. We'll see. I was bullish, and now it's an IDK. I don't know. And oil is down a shade. Is this ABC for A, and then this is B, and we're going to get a C? Or are we going to get one more new high? And why do I think we'll get one more new high? Come on, guys, Why do I think there should be one more new high in crude? Here's your hint. No, that's not. That's right. TJ knows. All right, so confirmed high. Yeah. Okay. Yeah, I mean, this might be a great. That was a confirmed high on the oil here. Kevin, you see this high right here, and you see this RSI. So that's a confirmed high, price and momentum. So yeah, it could be, Jay. I'm not saying just because we're down today that this move was not the low. But I mean, if you like gold, not a bad time to put a position on and risk the lows, right? Could form a higher low. I don't like the week. Here's the week on it. It's not such a great close if we close down here. Okay, so I think that's about all I have to cover. Yields, I think will be peaking here next week. So keep an eye on that. There might be a play, in the bond market. I don't know how TLT is going to end up being sharply lower, but there might be something to do there. Higher the yields, Jay, higher the more opportunity cost there is in holding gold. So normally higher yields make it less attractive. If yields are zero, you have no opportunity costs, right? So that's how the reporters are explaining it. Lower yields, yeah. But I've seen gold go up while yields are going up. It depends on the cycle. But as of late, the higher yields have been bearish. Yeah, generally that's it. You're very welcome. TLT is a 20-year ETF on treasuries, Amira. This is it right here. So this is where the Fed came in on the COVID crash. And it's one of the only markets that it's given back the whole recovery from COVID. So, bond markets, even though I might be looking for a rally, I think it's just going to be a bear market rally, maybe back to 150, 155. 100 years, I have no idea. 1,000-year bond. Yeah, I'm going to be there alive to collect the coupon. So, guys, Friday is a great day to join and subscribe because then you have all weekend. I like Blake's idea. First you start off with the trial and you see the whole thing. That's $1. And then if you see that you don't need everything, then the light is there for you. So, you explore it with the trial. And then after 10 days, you make a decision as to whether you want the whole package. I've never been to London. And I actually, my life's an open book, guys. I've been separated from my wife for almost 2 years, 1 year, and we've reconciled and we're getting back together. And I'm moving back to where her and her parents are, probably after I get the shot. If you Google my name, you'll see me interviewing myself. I fought for this. I fought for it. So anyway.
So you had two good years, and now you want to spoil that, right?
Yeah. I can't handle all the peace. I need a little more drama in my life, Steve. So yeah. Anyway, you were the one at New Year's who said, "I hope whatever you want to happen to you this year happens for you, Dale." And this is something that I've wanted for a
Good.
couple
I'm
of years.
happy for you.
All right, buddy. So anyway, I'm through. That's my life story. I'm an open book. Stelios writes books. I just tell everyone on Twitter and here whether I'm, doing okay or I'm constipated. So anyway, Mazel Tov. Thank you, Amira. And so that's a wrap. So you could do this in celebration of love always wins. How about that? Let's just say love always wins for today. And would love to have you guys as part of our family. And, we're happy you come here to Face. And we'd like to have you more involved with us. And we've, came up with that light product so it's affordable to anyone who doesn't even have a huge account to trade, so that you have I think Blake said, the mobile app. I don't think many subscription services have it. And these guys, my team has put in so much time and effort and capital to make this really the only place you have to be all day long when you're trading. So give it a shot. Anyone have I sold anyone today? If I have, give me a Y. Anyone hearing my voice that was going to at least take the trial if you haven't before? Okay. All right, great. Laura. Okay, Laura. Welcome, Laura. Another earthquake in Greece. Gosh, you guys get more of them there than California, but I better not talk about it too loud. We're way overdue here. All right, so Blake, it is Friday. I know it's one of your favorite days as well as mine. And is it next week you have to get up earlier, or you got another week or so? Is Blake Morrow around? Okay.
He seems to be here.
Yeah. I don't know if the time changes this weekend or not. Anyway, we'll see.
Blake?
Yeah, I've heard that analogy, Chad. It does change, huh? Yeah. I've been called Steve McQueen. I jumped over the fence in my motorcycle, and then I turned around and jumped back in.
Did you actually ever have a motorcycle?
No, oh, well, Honda 90. I don't know if you could call that a motorcycle when I was in high school. Yeah.
Okay.
You know, it's like a Vespa. How about that? All right. So
Hey
something.
guys, so I was
there
gonna,
he is.
I don't know if I missed anything here. I'm sorry. I was
just me, you know, so you didn't miss anything.
You know, I was going to say something earlier. You were talking about the Moderna, like the vaccine or whatever.
Yeah.
You know,
They ran out.
Yeah, I heard. Well, that's why I was gonna say that. That's a shame, and I hopefully you can get it soon. Anyways, I was just about ready to unmute my mic, and then, as you guys know, we all work from home, and at this time in the morning, no one's awake in my home, and I'm everybody's at a different part of the house. I'm segregated with the office, and dogs are down here, and so they all like started scratching at the door as soon as I was about ready to hit my unmute button, and but that's not going to happen after next week usually. Do you know why? Or into next week? Do you know why, Dale?
Because the dogs will still be sleeping, or
they'll still be sleeping because of the time change. So
okay,
there's a time change this
Lucky
this week,
dogs.
guys. Huh?
Yeah.
Lucky dogs.
Yeah.
They get sleep over more than you.
Yeah. The thing is they just normally get up right around this time, but they didn't wait for me today. Anyway,
right.
So I wanted to talk about a few things. I know you guys were chit-chatting. I'm not too sure what you guys were chit-chatting about because I wasn't around, but I wanted to talk a little bit about what's happened with bonds and kind of where stocks are at. Let me pull up first and foremost the 30-year because we had a 30-year auction yesterday. But take a look where bonds are, or the yields are at right now. We're actually above the levels that we were at yesterday. So if you're out there chasing stocks higher right now, you need to be very careful because yields are rallying. There's your 30-year. Your 10-year is not too far from the highs. Now, I'm not saying that. Well, I got a question from Patty. And he's in the UK, and he asked us yesterday. He asked Blake, is it possible that yields go up and the dollar goes down? And I'm like, absolutely, it can, because yields can go up, and if yields go up, you might have the market always, they try to draw some sort of conclusion that, this is happening because of that. So if yields go up, yet stocks don't sell off, and let's say they go higher, people would say, oh, well, yields are going up because the economy is great, and, so on and so forth. I actually do believe that yields going higher is really going to be more problematic for the markets moving forward. And, it is because it's going to force the Fed to actually consider tightening. Okay. So that is one of those that's one of those things that I think that we have to, think about, is when the market actually puts the Fed in a position where they have to actually consider either talking about tightening, or they have to do the other bazooka, which is yield curve control. So if they do, yield curve control, that's when you just sell dollars hand over fist and, buy gold, and then the S&P should be trading at 5,000 or 6,000 in the next day. So yeah, I know we're at 3,900 right now. Where are we at? 39. Where's the S&P right now? 39.25. So we're at 39.25 right now. But yeah, theoretically we'd be at like 5,000, like in an instant, if that happened. But I just wanted to say, I just want to talk a little bit about yields, because they are moving, and as they are moving, we need to consider what the ramifications are. And currently, unless the Fed announces any type of yield curve control, the market might start to think that the Fed may have to alter their words soon, and hint about tightening, or tightening or some doing some sort of operation twist or some sort of scheme to combat rising yields. And that could weigh on stocks at some point, not necessarily today, but people are looking at stocks right now, and they're like, oh, the Nasdaq's getting beat up, and the Nasdaq's bounced pretty aggressively off the lows. If you see this bounce, but one of the reasons why the Nasdaq continues to diverge and push lower here versus like the Dow that continues to press higher is that this rise in yields is actually weighing on these tech stocks, and it's going to continue to put pressure on them, probably more so than others. Then one other thing I wanted to mention before Steve and Stelios come on is the dollar Canadian. We have Canadian jobs data coming up, and with Canadian jobs data, we need to watch first of all, the dollar Canadian is not performing well. It performed very poorly yesterday. I think it's because crude oil was, on the march higher. And if you haven't looked at crude, it's back, near 66. Looks like it might challenge like 68 or maybe even $70 a barrel. So the Canadian strengthened as a result. So what you have to watch here is what happens with the dollar Canadian if we have a strong Canadian jobs number today, which is possible. I mean, you can jobs data from what we're seeing is jobs data continues to rebound almost globally. Now, I don't know about Canada, although they are looking to increase, I think, about 100,000 jobs. But unemployment rate's supposed to improve. Here, actually, let me pull up the data for you. Whoops. So here's data flash. And then we do have producer prices, by the way. And, with obviously CPI hasn't been ticking higher, but producer prices have been ticking higher. So, and that might trickle down to the consumer at some point. So just keep that in mind. So Canada employment, 9.2% is what they're looking for. And, the forecast is about 75,000 jobs. I would say, the market may be, pretty happy, especially if we create 100,000 jobs in Canada. Now, again, if that number is a miss, that's where we have to start, being concerned about the dollar Canadian getting back above 126. But as long as we're, within the realm of the expectations, and unemployment continues to slip from 9.4 down to 9.2, then the Canadian should fare well in this environment as stocks are staying strong. And one of the things I would probably be most concerned with, and I'm going to leave you with this: if you're buying risk, meaning that you're long, let's say Aussie dollars, or you're long Canadian dollars, or you're long stocks. As long as the Dow is holding the breakout point here at 32,000, then you got to assume that risk is going to continue to press higher, because the market is obviously comfortable buying value stocks over growth stocks when they're buying Boeing and the Dow components. It's if the Dow components start to break down below 32,000, that's where you have to start being a little bit more concerned. I do want to point out this chart. Here's a daily trend line of the Dow that, as when you're at all-time highs, you have to sometimes draw these trend lines to go, okay, well, where, what could, cap the rally. And I drew that yesterday. So if you're in the chat room, you saw it, and it did cap it for now, but I'm not sure if it's going to hold. It's just, it's capping the upside for, near term anyway. So that's something that we should just keep an eye on. All right. Let's see. And that's it. Steve, Stelios, how you guys doing today?
Good morning. Hello.
Good morning.
TGIF. All good here.
Hello, Steve's.
Hello, Dale. All good here. Yields is the driver again, right? Today.
That is what I think is driving the market right now. Everybody is talking about yields, and that was, that pushed the NASDAQ. I mean, the NASDAQ was really under pressure until, I joke about it, but it's like, dude, every time North America steps in, they buy stocks every day. It's not, there's that behavior has been the same for like literally a year. So
it's like there is a program, right?
Yeah.
Of some kind.
Yeah. I mean, it's just that's just it's what it is, and it's like one day it'll snap, and we'll turn around and go, whoa.
That video made 10 years ago is still so relevant that, by the F-dip, you remember it.
Yeah. I mean, that it still is.
After 10 years, it's still like it was made yesterday, right?
I know. Anyway, well, I'm going to pass it over to you guys. Hey, good luck, everybody, today. There will be, just remember, the Morning Edge webinar, the one that is for ForexAnalytix subscribers only. That is in less than an hour. I'll see you guys there. And remember, if you are a ForexAnalytix subscriber, Daily Roundup does not broadcast today. Doesn't broadcast on Friday. So I'll see you guys in about an hour for those of you that are normal subscribers. For the rest of you, ForexAnalytix subscribers, for the rest of you guys, have a great weekend. I'll see you on the week ahead video that we'll produce for you this weekend. Thanks, everyone.
Thank you, Blake.
Have a good weekend, Blake.
Thank you, mate.
Thank you, Blake. So yields going higher, 160 in the 10-year. The equities didn't like it early, but now the invisible hand that brings everything higher has stepped in, and Dow is actually positive. I think futures, and
what a surprise!
I
mean,
doubt. I
who
seriously
could have seen
doubt,
that coming?
Yeah, I seriously doubt after yesterday's move, unless obviously yields can just keep rallying and rallying. I doubt we're going to see any decent down days, at least not today.
I think, Stelio, we should be a little bit careful with yields here, because I'll show you, since, as you're talking, I can show a couple of things that are relevant. So here is the 30-year testing resistance, and here's the 10-year, which seems very much like it's forming some kind of an ascending wedge. Look at the RSI divergence as well.
Yes.
Dale would call this a 3-drive formation, right?
Oh,
1, 2, 3.
I don't like those anymore.
Yeah. So
because sometimes the 3 drives turn into 30.
And also, it starts to get very popular, talking about yields. And you know how the market works with that, right? I mean, once people get really obsessed with something, it's time for the market to move the other way, even temporarily, you know what I mean? So yeah, I don't think this is the place somebody should be looking for more upside in yields, but rather more of a pullback from a technical perspective. At least the 10-year, this looks a rather steep ascending wedge, too steep for it to overthrow to the upside easily, more than just a little. So that's what I have to say about that. Now, having to do with the question that somebody asked before, if yields can actually move higher and the dollar move lower, actually, we've said that years ago. My prediction is that that's going to end up being the end game, because yields, theoretically speaking, if they let the market be somewhat of a market, we'll have to price in, the in essence, the debasement of the dollar and the rest of the fiat currencies. And once everybody realizes what I've been saying for a long time, that the Fed has absolutely no intention of doing something about it, they're claiming that if they see inflation coming, they actually have the tools to do something about it, but they're not willing to do something about it, because yes, they do have the tools. The tools are very easy. You raise interest rates as Volcker did, and problem solved, like in zero time. The problem is, can the economy actually afford higher rates? Not without the markets and the wealth effect imploding. So I think that at some point, everybody's going to realize that the Fed is bluffing, and when that happens, both the nominal rates are going to be moving higher, and the dollar is going to be moving lower, and in my opinion, in an accelerated pace. What else, Celio?
Sorry, I was muted. I was speaking. I was muted. Yeah, so it looks like the only asset class really reacting to yields is precious metals again.
Yeah.
Gold and silver are lower. Equities don't care. Like you said, remains to be seen. We had some data today out of UK. GDP was worse than expected year on year. Industrial production, manufacturing production, everything was red, except trade balance. Trade balance actually for January, remember this is after Brexit, was nearly 3 billion better than expected, from 12.5 to 9 point something.
Okay,
and
negative, obviously.
Yes, negative, obviously, yes. And so, that's interesting. And we have PPI in the US in about 2 minutes.
Yes,
and
we
the
do,
Canadian
with
data.
expectations being for 0.5.
Yep.
Core PPI expected at 0.2. Year-on-year PPI expected at 2.7.
Yes, that's a big jump.
Yes.
Which kind of makes sense. The rising commodity prices are feeding through to...
First of all, we've seen from the numbers, Delio, it's a fact that we have decreased productivity. I mean, think about it. We have decreased productivity. We have a lot of people that are not producing and collecting income, which definitely increases prices of some goods, some of them which are, main goods for the production of other goods, right?
Yes.
So yeah, it makes sense. We also have Canadian employment change expected to create 75,000 jobs. The previous was minus 212. If I remember, that was actually quite a big miss also.
Yeah, it's been a volatile number, these jobs.
Yeah, it has been extremely
very
volatile.
Yeah.
Canadian employment rate is expected to drop from 9.4 down to 9.2. So let's see what we get. We will.
Maybe we can look at the numbers, and then do we have a guest today, Dale?
Yes.
Okay, so let's have a look at the numbers in about
Who do we have?
40 seconds.
One of Face's favorites, Ben Maldonado.
Oh, very nice. Very nice. Okay, let's have a look at the numbers in 30 seconds. We'll look at the immediate reaction of the Canadian, and then we can go over to Ben. Awesome. Nice way to close the week. All right.
So 20 seconds to go. Yes. Anything you want to sing, Dale, for 15 seconds?
The news doesn't matter anymore.
Yeah. Last time it did. You were a young man.
Oh my gosh.
Okay, almost. Here we go.
Let's see.
0.5 month on month.
PPI
2.8,
a little bit,
2.8.
even a little bit hotter than that. Whoa, look at Canadian
that's
employment
massive.
change.
Massive. I don't see a revision on the previous number.
Whoa.
Drop in participation rate by 0.2. So unemployment rate has gone to, wow, from 9.2 to 8.2.
Yeah, I mean, numbers are getting ridiculous by the hour, honestly,
Yeah.
not by the day.
Yes. Interesting.
You know, the fun part, Stelio, I was thinking about it when Blake mentioned something about unemployment. The fun part is, you remember how many times in the past we've had the conversation of how, I remember we had specifically this conversation when Trump was bragging about, you know, like all-time low in unemployment. And I was explaining how the way employment is being counted is completely changed and in essence is fake. And I forgot to mention that. And during the past like few weeks, we've had both Powell and Kaskari, and probably more, but I heard those two, you know, with my own ears, in essence, accepting that unemployment is much higher than the actual number depicts, which makes you go, what? You know, I mean, I know that, I can say that, but how can you say that? You know what I mean?
Yeah.
And if that's the case, why didn't you say that, you know, when unemployment was supposedly amazing, and you're saying it now that unemployment is not good?
Yeah.
Because of course they want to excuse more stimulus, but to be honest, it's the truth. I mean, this is the actual truth. Unemployment is massively understated.
They will use it to their advantage whenever they can, basically. Yeah.
Anyhow, is your guest here, Dale?
Yeah, I've promoted you to panelist. I hope I promoted the right Ben, and waiting to hear your voice, and then I'll know.
Let's see.
It was Ben in purple.
Ben in purple.
Can you hear me now?
Got you.
Excellent.
Loud and clear.
Excellent.
Great to have you back, Ben. You know, I described you as a face favorite in Twitter. I mean, everyone looks for your, you know, once a quarter or so update on your geometric work and the 70s analog. And, you know, after this election, I haven't talked to you, is Biden, Jimmy Carter, who was it?
It was Jimmy Carter.
And
is Joe Biden. Is Joe Biden the next Jimmy Carter?
Yeah, is he?
It's looking like it. We'll see. I mean, we have to let the cycle play out, but the parallels are there.
Okay. So if you share your screen, I also remember a tweet.
I think you have to stop sharing.
He has.
Okay.
So
let me try here.
Box and you talk about what the weasels, who are the weasels in the tweet, what the weasels are going to be doing to us.
Right. The weasels are the guys with money that can push things around.
Okay. All right. So I see an orange. Here we go. All right.
So today we're going to take a kind of whirlwind tour. I know we're limited in time, so I'll try and keep it to the 30 minutes. Today, what we want to do is we want to talk about the big themes I'm looking at for this year. We're going to review quickly the epic cycle, which is the 400-year cycle where we are coming to an end, and its effects on things that are going on. And the reason why it's important is it's basically the background weather that we operate in, the frequency that either supports or doesn't support things that we try and do as a society.
Definition of epoch, please.
Long period of time.
Okay.
And 400 years would certainly qualify.
I think that's where
that's actually interesting, because it comes from the Greek word epochi, which means season, but it means like spring, summer, winter, you know.
Sure.
So it's a Greek word, but it has a changed meaning having to do with duration. Okay,
sure.
Interesting.
Sure.
Right, yeah.
Okay. We'll touch on the 70s analog. There's a few more parallels that we've identified, and an interesting look at the analog, which we'll do. I'm going to actually walk through geometry with people because I know there's a lot of interest on this on the ES. We'll show how we use geometry to come up with price and time on the ES. And then one of the major themes that we're going to talk about, and we'll run through some charts that are pointing to this and giving us a preview of what's coming, and that's the inflation, stagflation sort of thing that we're going to experience here this coming year and the next few years. The themes for this for 2021 that I'm looking at, first and foremost, inflation, stagflation. I think when we get into that part of the presentation, I'll give you examples, but we are experiencing inflation no matter what the government agencies try to tell us. And I think Steve and Stelios talking about how the data is just ridiculous. There's no better poster child for it than the inflation numbers that they're posting. So we'll talk about that. The epic cycle is about this erosion of trust in old, large institutions that we've depended on. It's going to continue. It's continuing. There's example after example. And what I want people to do is to just be aware of this sort of phenomena. And then you can start looking at the news and events through a different filter and sort of see how this is happening slowly but surely, where these institutions that we've depended on are no longer dependable. Part of that this year, I think we're going to see much more supply chain disruptions and issues with the supply chain, all up and down at different goods. We're seeing it in
semiconductors.
Semiconductors is a perfect example.
Whoever thought there would be a shortage of those? I mean,
right.
The Bears always used to say, well, they're just a commodity like everything else. So, we were oversupplied for many years with semiconductor, with chips.
Right. And it's made out of sand. Sand is so plentiful. How could that be a problem? Well, it's a problem now. And the obvious ones during the pandemic were the consumer goods, but I think we're going to start seeing more things like semiconductors and components and pieces of the supply chain and the production chain that are used in to put together larger products. So it's something we have to be aware of. Another one that I think is coming up and is going to affect the commodities and going to affect the part of the real assets that we're going to talk about is food security. This is going to become a much bigger issue. We're going to see it in the headlines more and much more discussions about it. And hopefully it won't escalate to where wars can be fought over it. But this is the type of thing where wars are fought over.
I mean, it's already showing up, right, Ben? I mean, because of the pandemic, all the food lines and, people say, well, why are these people pulling up for food? They have a new car. They have a nice car. They're just taking advantage of it. But, with 0% rates, anyone could get a car.
That's true.
You know what I mean? So, what kind of car you have, you could have a luxury car and live in a, cardboard box. Okay. So, you can't judge people on what they're driving. If they're going to wait in line for hours and hours for a box of food, they must need it.
Absolutely. And the food lines is one manifestation of it. If you look at the headlines today and recently, there's starvation in Yemen. There's a crisis with food in Yemen, and around the world, there's different spots where this is going to continue to pop up basically in this cycle. The epic cycle, for those that haven't heard my presentation before, is a 400-year cycle that we've gone through and we're coming to the end of. It ends in the next 5 years. What this cycle, the characteristics of this cycle was the development of large centralized institutions for organization and support and sort of logistics and the way we ran our societies. We're currently in the latter stages of it where it is fragmentating. People are losing trust in these institutions. I mean, the examples, which will go on in the next page, are numerous. What's the next cycle going to be like, and what are we transitioning into? We're moving from this communal or tribal organization to a system set up where it's the individual and decentralization that is going to be the background frequency. Now, this doesn't mean that there's going to be no large organizations. It doesn't mean there's going to be no centralized control or centralized power. What it means is that the background frequency, which was there to support those institutions, is no longer present. And what is going to be supported is these decentralized, individualized, smaller type of organizations. And there's examples of that as well. Here's
you really
a list.
inspire our attendees. Someone said that the CDC is preparing people for the zombie eclipse. You have anything on that, Ben?
I don't have anything. I don't have a zombie cycle.
No, yeah. All
I
right,
don't
go
have a
ahead.
zombie cycle.
Anyway, all right.
So-
The Zombies
You
were a
think,
great
if you
band in
think
the
you
70s.
don't, if you think about the banks, we also have zombies.
That's
Oh,
true.
yeah, that's
There's
right.
a lot
Yeah,
of zombie companies
Yeah.
out there. No question.
The Zombies were a great band.
Right.
Well,
Yeah.
no one told me about her, the way she lied. Remember that one?
Oh yeah. Oh yeah.
All right,
Listen,
go ahead.
the key
Huh?
thing for people to think about, it's not all doom and gloom. It's just going to be different. It's going to be different than what we're used to. It's going to be different than obviously what anybody that's alive has ever been a part of. But it
Yeah.
doesn't necessarily mean disaster. It's going to be
Okay.
rough. It's going to be a rough transition because you take people from one system to another. There's a lot of people who have a problem with change. If you're adaptable and if you sort of understand what's going to be supported, it'll help you know what to do and what's right for you. And it's smaller, individual. Depend on yourself is the sort of message. Don't depend on the government. Don't depend on others. Depend on yourself. Be self-reliant. That's the key thing. So the things that I want people to be aware of and look at one by one all the different powerful centralized institutions that are now either failing or people have lost faith in them. Media, TV, newspapers, social media, organized religion, government, throw everything under the government you want, education systems, multinational organizations. Now I would throw the Federal Reserve in there. Are they losing their credibility? I think so. Are people starting to say, hey, maybe the emperor has no clothes there? And the bond market is pushing them right now and saying, okay, you're not going to raise rates? Well, we're going to raise rates. So that's going to be an interesting thing to see how it plays out. With the last election, are elections and democracy now in question? Half the country probably has lost faith in our ability to hold a fair and just election. Doesn't mean it's true, but that's what they believe. So these are the things and the markers that people need to look at. The ones I have where there are question marks are beginning to start to play out. Fiat currency. People are losing faith in fiats and what's arriving and what's emerging. Cryptos. I'm not here as a crypto evangelist, but what I'm saying is the concept of a crypto where it's decentralized and it's more an individual thing and not a powerful central bank that's controlling it. The frequency is going to begin supporting that type of thing. Now, I don't know if cryptos is going to be the thing, or maybe it's the thing after cryptos that takes hold, but certainly fiat currencies is now in the crosshairs. With what just happened in Texas, public utilities, right? You turn the switch on, you get power. That wasn't true in Texas a few weeks ago.
Yeah.
For a week, people couldn't get power. They couldn't get power. They couldn't get water, things that we depend on, things that we rely on. So
and the supply chain plays into that too. I remember reading that if we ever had a major transformer blowout, we don't manufacture them here. Right. China does. And it could take months to replace it if they want to even send it to us.
Right. And so these are the types of things that I just want people to have in their awareness and watch the news and look at it. It's not anything where you have to say, oh my God, it's the end of the world and the zombie apocalypse is on us. But you got to start thinking about how can you take care of yourself? What can you do? The last one I put in here is interesting. This whole Wall Street bets and the hedge fund issues. Power has been concentrated in these hedge funds and in Wall Street for years, for 100 years or more in this country. Is that starting to erode? Is the individual starting to have some power? Is there, again, the emperor has no clothes there? It's possible. It's something I have on my watch list because I think it fits with what's going on in this massive cycle.
Okay.
Little smaller cycle, we go back to the 70s, and I've talked about this with Dale for quite some time, and the ones that have check marks are things we've talked about and confirmed. The ones below are other ones that I've identified that I believe are going to play out, and they're either starting or they're yet to start, but we can sort of see what's happening. New York City is definitely going to have a fiscal crisis. You cannot decimate your tax base and spend money recklessly and not have issues. They've probably pushed that out with this relief bill where they were bailed out by the federal government. But there's a fiscal crisis set up for New York City, and there was one in 1975. Stagflation, we're going to talk about. Jimmy Carter was the president during this rough time. Joe Biden certainly appears to be the next Jimmy Carter, a Democrat coming in after an unpopular Republican. Nice guy, probably not the best manager to be running things when things aren't going smoothly, but that's yet to be seen.
How about the Hoover Roosevelt analog?
That certainly fits, and that's back another almost 100 years, but a 90-year cycle. But yeah, that fits
in the 30s. Okay.
Certainly fits. 90-year cycle, which is twice the 75 cycle, by the way. But if we go to the other,
you skip the vaccine issues because I've already had one.
I know, and
right.
and the vaccine. There were people don't realize it, but in the 70s there was a bad outbreak of swine flu, and the government set a goal to vaccinate all 200 million Americans, and they started rolling out a vaccine. There were a bunch of issues and a bunch of problems, and they just stopped cold. And just
was Fauci involved in that?
I don't know.
All right. Anyway, I just Bill Gates hadn't stolen Outlook yet.
Exactly. So
has he? Okay.
Do we have vaccine issues? I have no idea. Are we going to have vaccine issues? I have no idea. There's just
you're not taking it, are you?
No, I'm not taking it. I'm not taking it for a while.
All right.
I'll roll the dice a little bit, I guess.
Well, I'm going to be a zombie knocking at your door. Go ahead.
The interesting thing, a couple others that I was doing when I was researching. Did you know that the first Earth Day was in the 1970s?
No.
And now, what is probably one of the most strong issues that's driving policy everywhere? Even the Federal Reserve is talking about it in their monetary policy. Sustainability. So again, it's not that it's exactly the same, but that frequency, that background weather
pretty
is
close.
Supportive of it.
Even more intense.
It's even more intense, exactly. So
back then it was just something for us to have a rock concert around.
Exactly, to have a day
right?
where you run around outside.
Forex Gal, remember we would go, it was a fun day. It wasn't the world is ending because of carbon.
Right. The last one is the movement for women's rights and gay rights was really starting in the late 60s and really picked up speed in the 70s. Certainly now the whole gender rights and LGBTQ rights is such a strong thing again today. And that's where the parallels come in with these cycles. This was an analog that we were following for a long time, and we followed very, very well. The X here, it's a little faded, but you can see it was where it stopped. The time and the cycle is still running. We are here in time right now, so we're coming to the end of this leg of the cycle. And what I believe is happening is this low is going to end up being a high. And I'll show you in the next slide why.
May, Ben? Because I know someone else is talking May. Is that?
Yeah, the window, and we'll show you with the geometry where the window is. The window is now until May, essentially. Right. And let's go through it. So market geometry, let's quickly go through this. time and price in the financial markets vibrate to a specific geometric resonance. And what we try to do by putting squares and circles and using triangles and different geometric shapes on the market is we try and capture that resonance, right? We find the correct vibration on a market, set it properly, and then you have your grid that it seems like the stock prices and the commodity prices follow this really, really closely. So this is what we try to do. So let's look at some geometry where potentially a high could come in. Here's your monthly on the ES. It's a vibration set off of the 09 low, the first great financial crisis. It gives us a potential price target here. And we broke out yesterday and we're pulling back today of 41.13. Because right here, this red line are places where there's very important support and resistance. When you're under it, it becomes resistance. When you can get on above and sit on top, it becomes support. And you can see at times when we hit these lines, what happens. Price reacts at these spots. And that's off of the 09 low. That's the monthly. Okay. So let's look at the daily. What does the daily show us? It's a different vibration for the daily, even though it's the same market. Set at last year's low, the pandemic lows.
Right.
It gives us a number of 41.20. That's okay. That's two numbers in a similar area, right?
Yeah. Different
time frames, different vibrations, but in the same number. So we got to pay attention. 41.20. I was doing this. This has nothing to do with geometry, but I said, this is a nice little inverted head and shoulders pattern. We broke out of the neckline yesterday, back tested it, targets 4,100. There's that 4,100 number again.
Yeah. Okay.
So that's a reasonable objective if we go higher, right? That 4,100 area has geometric resonance on a monthly and a weekly basis, and there's a pattern that supports it on a 60-minute. Now let's look at time. What can we do from time? Again, looking at the monthly, we've got the low set at these panic lows in 2009. We are this month 144 months from that low. 144 is a very important number. So it gives us an idea that a high could come in anytime this month, the previous month, or the next month. So it gives
How about yesterday? Do you think that was it? We had a roll over a wedge, and then now we're back underneath it.
I think it could be, Dale, but we need some evidence that okay, we're going to start taking out lows and we're going to start moving lower. If we keep just going sideways and chopping around, it gives them a platform to make another push.
Okay.
Here's the weekly. Let's look at what the weekly timing gives us. If we go from the low, the panic lows in March of last year, 54 weeks, which is again an important number, a derivative off of the 144. You take 144 minus 90, you get 54. Gives us the week of April 11th. So that comes in here, March, April. Let's go to the next one. Let's look at the daily. On the daily, 144 off of this September low caught that February high there. But I think we're going to keep pushing and take it out and get a newer high. I think odds favor that. So I'm looking at different timing. Off of the low last year, this takes us to March 23rd. This takes us to May 9th. That's 360 and 405. So these are, again, giving us a time window where we could see this anywhere from now to early May. So what do we do with that? That's a pretty wide window. What you got to do is you got to then look at the technicals and look at price action. If we start taking out lows and start making lower highs, you can say, okay, you operate from the fact that odds favor a top is in, sell on pullbacks where you can have a decent stop against a level that tells you you're wrong. Inflation and stagflation. My premise is that inflation is here, stagflation is coming. What do you do when there's inflation or stagflation? You buy real assets. real tangible assets perform the best in this type of environment, and we'll go over some of the numbers. This is my WTF slide. The government's telling us no inflation. CPI is muted, PPI is muted, there's no inflation. Powell and all the talking heads tell us every single time they talk, inflation is not an issue, it's below target, we'll deal with it if it gets above target. Well, here's 100 years of history that tells us something different. The blue line is M2 yearly growth. The light blue line is CPI. What's most likely to happen?
Yeah.
You can't grow
Reversion to the mean. Yeah.
Yeah, you can't grow M2 like that and not have it wind up in causing inflation. 100 years of history tells you that.
Yeah.
So where do we invest? Here's the correlation of real and financial assets with inflation for the last 70 years. Real assets, number one on the hit parade, commodities, platinum, real estate, diamonds, you can see them all. T-bills do well because interest rates are rising in this environment and they're very short term, so you're capturing the higher yields. But if you look at financial assets, they do the worst. They perform the worst. Here's how I've put this slide up before, but I think it's important enough to look at. Here's how real assets performed in the 70s, because again, we have that analog with the 70s. Just look at the top of the hit parade. Those are the places we want to be: gold, silver, oil, collectibles, real estate. This is a great chart I put in the last time, and I just show it again, connection to the 70s, but most importantly, gold versus the money supply. With the money supply going like it is, gold, I mean, we're down here at the lows. Gold is just set to launch. And they're shaking the trees right now in gold. I put this chart up to let people see, you know, all the different drawdowns you can see in a bull market in gold.
Yeah.
And they're shaking the trees. What you do is, you know, hold your position or buy near support and manage the position. If you can do it for the long term, the rewards on gold are going to be fantastic. Here's gold monthly. When you're inside this circle, you get that acceleration. Once you come out of the circle, you pop down, and you often see pretty sharp retracements like we've seen in gold. Right now,
yeah.
Go ahead.
So we're out of the circle. Where could we go?
Well, this is what I'm showing. These dashed lines are support, and obviously these thick red lines are very strong.
Where's
support.
the next lower thick line down there?
What I'm looking at, we're at 675 is current support. There's a monthly ABCD that ends at 1640. So if they really, really wanted to push it, 1640 could be a spot where they shake the trees.
Okay.
I'm thinking the targets on this are at least 1930, which is right in here, and I think more like 2442, which is up in this area, I think is realistic for gold.
Okay.
Silver, I want to show this format because look at this chart pattern. You're going to see this in commodity after commodity after commodity. Silver's broken out, long base, breakout. Silver's, you know, just correcting. It's actually holding up better than gold right now.
It is.
There's resistance up around 29.28, support at 25, and if they really shake the trees, 21. But silver looks good. The dollar obviously is extremely important right now. Tons of markets are keying off the dollar. Major supports at 87.47. Do they shake the tree down there? Possibly. I don't think that there's, in the short run, there's risk of a collapse in the dollar. I know everyone's talking about.
You think there's going to be a bull move in this scenario in the dollar?
I think it's possible. I do. I think it's possible.
You don't like to talk about it because it's not popular and people think you're, you know, lose credibility. But you're bullish a dollar. Come on, open up.
I think the next major move is a bullish move in the dollar.
Okay.
Wait, Ben. Now I'm seriously confused. I'm with you with everything we said so far, but so in essence, you just mean that there's going to be a general debasement, and under that scenario, dollar is going to be doing better than other fiat currencies.
That's right. It's going to be like a beggar thy neighbor thing, where the dollar becomes some sort of crazy safe haven, even though everybody's debasing.
Why would, out of curiosity, out of technical reasons, why would the dollar, which, I mean, any way you look at it at the moment, the US economy is by far the worst in the developed world, having to do with deficit, trajectory of the debt, trade. I mean, anything you look at, it's by far the worst. So what do you think would make it, especially under an environment? You started your presentation by saying that everything is going to come in doubt. So everything that's a given, I think like the most major component of that is the dollar's position as the world's reserve currency, which have been abused for decades now.
Mm-hmm.
What about the euro experiment? How about the euro failing?
Well, what Steve, I think you bring up a great point. It's very paradoxical, right? In that everything that you said is true, and that's the picture I'm laying out here. I think it's really a matter of, where is big money going to go if things start falling apart? It's going to go to the dollar. And it's not because they think the dollar is a great place. It's because it's going to be the best alternative.
Definitely, there's going to be some part going to the dollar. I mean, if we see liquidation in risk assets, for example, we know that the first place you go leaving those risk assets is, the dollar. So,
right.
In some extent, if we do have a turn lower, that can happen. But I'm not very sure about how much it can last. You know what I mean?
I agree with you. I agree.
Yeah.
I don't think it's a long-term
thing. Temporarily, but
yes.
Yeah, exactly.
Yeah,
but not for a long period of time.
Right. I think that is the scenario. Now, I'm open to any possibility, because you can't be rigid. You can't be, say, hey, I'm right and the market's wrong. If the market tells me differently, I'll change the macro outlook.
Absolutely.
But right now, I think if there's trouble and we get risk off, which it's coming at some point, I think the money's going to flood to the dollar as a safe haven, not as a referendum on the strength of the U.S. economy or the strength of the dollar, and that may cause even more dislocations, as you know, because of the effects of a strong dollar.
Absolutely,
so it may feed on itself. In the short term, but we'll see.
How much more time does Ben have, Steve?
I mean, we can.
Okay, go ahead. Continue.
We can go ahead for another 7-8 minutes.
Okay. All right. I got a few more charts we can look at. The treasuries are very interesting. Here's another example of that circle, right? The geometry of the circle. Once you get to the edge and go, it accelerates. But then when you fall out, you have to deal with the problems. The issue here, the last time I was on here, we were bouncing off this support, and I said, hey, it's a decent trade here, looking for higher bonds and lower rates. That got slammed, but I had my risk measured. I had very good tight stop loss, took the loss.
Newsflash, Ben could be wrong like everyone else.
Absolutely. And the key thing is if you enter the trade and you know your risk, and the risk reward is acceptable to you, you take the shot, and then if you're wrong, you just admit it and move on, live to fight again.
Yeah.
But the bonds are looking extremely weak. Steve was talking about higher rates and the things that are happening. The geometry, the pattern, everything supports weaker bonds. So on any bounces into nice resistance, I'm a seller of bonds because higher rates are coming. It fits with the inflation scenario. It's higher rates are coming. There's no question about it. Let's go commodities. Part of the thesis is commodities is the place to be. I show this chart because, again, what happened in the 70s, commodities to GDP versus where we are. This is the potential, right? Commodities can become a much bigger part of nominal GDP. We're at an area where we're at historic lows. We don't even have to get back to the highs to make great money in commodities. Here's beans. Beans we've been talking about for a year. Again,
that was a great call.
Remember silver. The big base, multi-year base, breakout. There's your breakout move. Beans for the last 2-3 months have been kind of doing this up and down chop, frustrating everybody. I think fairly soon we should see the next leg up in beans. Buy it into support. It looks very strong.
I think there's a shot for $11 on a pullback.
It's possible. I mean, I've got.
That's what that's where I'll have my bushel basket.
Yeah, 1350 is the current sort of short-term support. I think we can get, once we break out, we can get to 1560, 1600 on beans.
Oh yeah, 20s.
Yep. Here's wheat. Again, big base, breakout. It's
China.
Yep, grappling with resistance now in the 670s area, but this looks much higher. Wheat looks good. Corn, same pattern.
Even better.
Big multi-year base, breakout, dealing with resistance here, frustrating people. Buy it into support for the next leg up.
Yeah.
Coffee, another one. Big base, broke out the downtrend line, but it's still been sideways and it's grappling with this resistance here. But again, it's set up for another launch, similar pattern.
Okay.
Cocoa, big base, still in this triangle, yet to break out. Again, looks set up for a move to the highs. Sugar recently broke out of the downtrend line. Big multi-year base, set up for a move much higher. And I forget, one of your presenters had a really good correlation between sugar and inflation. And the charts are sure telling us that that's going to happen.
Michelle Schneider.
I forget who it was, but it was a nice correlation. Sugar's set up to go higher.
Yeah.
Cotton, big base, recognize the pattern, big base, downtrend line, breakout, and a move higher. All these things, remember, are monthlies, and they're just breaking out and just starting this move, which is what makes me think that the inflation we're going to get and the move in commodities is going to be really good. Copper, I know this is one of Steve's favorites. Nice move off of the base, and you can see there was a breakout, pause, and then second leg. This second leg is what I think all these other commodities that we're looking at are going to do. And it took it up to the highs of 2010, 2011. Crude oil. This is a different pattern. Doesn't have that same base look to it, but it's one that we just had a extremely important breakout. Right here, we were up under, and this was at around 60, 61. We were under important monthly geometric resistance and this downtrend line from the 2009 highs. We broke through both and are staying on top. That is really bullish. Yeah. Support is around 6170, 6180. Resistance is 6660, and then $75 is right here. Easily do 75 and then go into these higher ranges over 100. It could. The move is the pattern is set to do it. As long as it stays bullish and holds these support levels, higher prices are coming in crude.
Yeah, I've said it before. I think we're going to see triple-digit crude again. And, almost nobody believes it. Oh, everybody thinks like crude is done. But, they're not taking into account that it's priced in fiat. So, in nominal terms, it's definitely not done.
I think you're right, Stephen. The chart supports it. And not only is it the issue of being priced in fiat, it's the issue again. Remember, we're set up for a cycle where we're going to get supply disruptions.
Yeah, absolutely.
How's that going to manifest? Who knows? Is it war?
Okay,
I'm
getting a heads up from Blake that they have another webinar starting shortly. So if you could
last chart,
please. Okay,
last
thanks,
chart.
man.
NQs. Everybody made a fortune in NASDAQ and Tesla and Amazon and Google and all these things. This is looking like it could be done.
Yeah.
Resistant. The high
NASDAQ
came in
led
on
the way up.
resistance.
Yeah.
If this 12,100 area gives way and we get stuck under here, man, the party's over. And the other thing to notice, the important thing is we're 144 months from the 2009 lows, and this 2000, remember the last time NASDAQ was in a bubble was 2000, right?
Yeah, and look at where it was. Yeah.
This is high to high cycle,
Yeah.
2000 to 2021.
Another excellent presentation by Ben Maldonado. He's the Pythagoras of trading in the 21st century. And I really appreciate you coming here, Ben. And that's how you could find Ben on Twitter using his name at Ben Maldonado. And thank you, my trading warrior brother, for
Thank you, Ben.
You outdo yourself every time.
Well,
So
I'm glad you guys enjoyed it.
And everyone have a great weekend. See, you go ahead and join Blake and the team in 5 minutes. That's a wrap for us. And remember, don't just count your squares and triangles, count your blessings. Adios, everybody. Thanks again, Ben Maldonado.
Take care, Dale. See you, Steve.
Bye-bye, mate.
Bye.